be here and speak with you today. Look, I want to talk to you about something a little different now, and it's good old-fashioned oil. Finder's historically been an exploration company. We've been very successful exploring for oil and finding oil and gas in the Northwest Shelf off the coast of Western Australia, and also in the North Sea in the UK. In the last few weeks, though, we've made some big changes. So we've recently completed the acquisition of a string of discovered oil fields in Timor-Leste, which is a transformational change for Finder. We booked off the back of that deal 34 million barrels of oil discovered, and we go straight into development of 22 million barrels. These are fields known as Kudetasi and Jahal. We acquired these assets from two majors, so Eni, an Italian oil major, and Impex, a Japanese LNG producer. So both of these groups are north of 100 billion in terms of market cap. So this project, although significant, very significant for a company like Finder, is just too small for a super major to develop. But Finder's a very nimble, cost-effective operator that's capable of bringing fields of this size into production quickly. So we've laid out a clear plan to get these oil fields to FID within 2 years and into production around 12 months after that. So if we look at Finder today, we have a market cap of around, in Aussie dollar terms, $12 million, with 7 cash in the bank, which gives us an enterprise value of only $5 million. Now, so that doesn't value these barrels that we've just acquired. Typically, discovered or proven undeveloped oil would trade for around US $5 a barrel. So with 34 million barrels of oil, this represents significant value that's not currently factored into our share price. So I'm here in Sydney this week and Melbourne on a road show. It's hosted by JP Equity, and Nick Brownbill's here today. We've recently undertaken a rights issue to raise 6 million. There's a 2 million shortfall there that Nick and his group are placing in the coming weeks. So I'd encourage you to talk to Nick if you're interested in taking up some of that shortfall or buying on market. What I would say about Finder at the moment, it's one of these rare asymmetrical risk-reward opportunities. So we're effectively trading a little above cash backing. So the share price just doesn't factor in the value of these oil fields we've acquired. So it is, I think, an extraordinary buying opportunity if you're looking for exposure to oil. These are high-quality projects that can be brought into production quickly using conventional development concept. So the development concept we're working towards, it's what's called an FPSO. It's simply a tanker with production topsides that you park above the oil field and you produce and fill that tanker. Another tanker comes alongside and the oil is pumped across and then sold into Asian markets typically. So these fields, they're in an area between Darwin in the north of Australia and Timor-Leste or East Timor. They're in 400 metres water depth. What's really quite extraordinary about this area is we see a very high quality reservoirs. The formation's known as the Laminaria Formation, and it's produced hundreds of millions of barrels of oil. And what really sets this area apart is the high quality reservoir translates to high deliverability, and that means strong flow rates. So we've tested Kudetasi and Jahal, and they've indicated flow rates of around 20,000 barrels of oil per day per well. So our development's a 3-well development. So at startup, we'll be producing around 60,000 barrels of oil a day. Now that oil sells for around $70 a barrel. So if you do the math there, we're generating, or this project, this initial phase of development, will generate of the order of $4 or $5 million US per day, every day, subject to a decline curve over time. But it's a significant project. Finder's very fortunate to have been able to acquire these fields. We picked up these assets on very attractive terms. It's effectively a vendor finance deal. So the sellers, ENI and Impex, get a royalty that's paid to them out of the cash flow from the assets that they've sold us. So it's a neat little mechanism that gives Finder very little cost exposure going forward. The cost to get this to FID is around $3 million US. Beyond that, there's significant capex to develop the field, but our plan there is to sell down to an industry partner. Those transactions, we call them in the oil industry, we call them farm outs, where a partner comes in exchange for equity in the project, they fund the capex for the development. In this case, it would be of the order of $250 million US. So that deal's important to us. We're running a competitive process to secure that partner and secure the funding. What that deal will do for us is two things. One, it'll give us the capex, which will provide a funding solution for that development, which I think will then allow the market to fully reflect the value of these barrels. And secondly, it'll give us a look-through value on the project. Now we've acquired this project, as I say, on royalty terms. The upfront cash cost to us was only US 5 cents a barrel, or US $2 million. And so we'd expect that deal to revalue the project at 100-fold on what we've paid for it here. So that transaction is something we're working towards in the next 12 months. Which I think will see a significant re-rating for Finder in that time. So we're really shifting now from being an explorer that's had some success in very sort of high quality acreage in the Northwest Shelf and the North Sea to becoming a developer and a producer. So it's a very exciting time for us. We think Timor-Leste is a very attractive destination for investment. It's a little ironic, but in the current environment, with ESG legislation and net zero targets, the usual preferred investment destinations, the West and OECD countries, are now seen as high political risk. And places, certainly in the oil and gas sector, places like Africa, South America, and Asia are actually the most attractive destinations for investment and into significant development projects like this. So we think there's going to be a big market for this asset in terms of the deal we're looking to do. It's what I'd describe as an affordable oil development. So your 250 million capex is a sort of mid-cap sort of development project in the oil and gas sector. Where typically, LNG and large-scale oil projects cost in the order of billions of dollars. So there's a big market for assets of this kind. We've got a great team at Finder in terms of doing deals. In the last 20 years, as a private company before we listed, we've done something of the order of about 30 of these sell-down deals. And if you tally up the deal value of those transactions, it's over US 900 million in deal value. And that went into exploration largely in the Northwest Shelf. It was high-risk capital. And that's really Finder's model. So we largely rely on funding for our projects from the industry, from industry partners, rather than equity markets. We operate all of our assets. So for example, in the North Sea, our partners are Equinor, largest oil company in Norway, a super major, biggest energy supplier in Europe now, that particularly now that Russia's been taken out of the equation. So they're a 100 billion plus group, and we operate a project with them in the North Sea. Our other partner is Dana Petroleum. Now Dana's owned by KNOC, which is the Korean national oil company. So we have very good partners there in the North Sea. Those partners effectively fund Finder. They pay our operating costs, our overheads, our salaries, etc. So Finder, unlike a lot of oil companies, particularly junior explorers, it's not a dilutive capital model. So we have a tight capital structure, 240 million shares on issue, and that capital structure will stay tight over time because we're funded through the operation of the projects that we operate in the North Sea. So Finder's a different model from other explorers, and I think that makes it quite unique. And I also think now that we've acquired these projects in Timor-Leste and booked 34 million barrels, you won't find many oil companies on the ASX with that kind of resource base that's proven, discovered, and ready to develop. So we're really here just trying to explain the story, trying to get the market generally to appreciate the value of what we have. And it's a pretty exciting time, and we're looking forward to getting those projects underway. Thank you very much.